Hey everybody, what's up? It's Booksy. Today is Monday, January 1st, 2024. And as Hagrid said, sorry I'm late. I have been in a position of vacation mode and doing other things. I've been doing a lot of other stuff around the house and just working on stuff. And this chart I've been working on for about 2 weeks now, but I say thankfully, but it's not been very fun to watch. Thankfully, AMC really has just kind of been chugging along sideways, been sitting right around the sixes ever since the drop in the last range failed. This is a complicated chart, but I'm going to do my best to explain it in very simple terms to hopefully get through this video fairly quickly. I did a really long version kind of this in some ways, the setup for it in the last live stream, which I believe is posted on the AMC channel. And if it's not, sometimes there's things that I just don't want to go over like 5 or 6 times. And it's something that I've been going over a lot lately is these things. I'm dragging them around on the screen right now. So number one is what I call like the master fractal pattern, which has to do with the sine waves. It's the one that has like the basic pattern that you see, and it's the one I've used to study both iterations and then how the algorithm on this stock likes to kind of comb through a range before it moves on. And it's a very, very good fractal pattern to study because it has kind of everything in it, ups and downs, Another thing is rotational symmetry. That's another key concept that I'm going to be talking about a lot on this video. And rotational symmetry is like a clock. If you think about the top and then turning around on the bottom, you can think of like an S if you want, but you can also think about it like a clock spinning around and you have the same rotation pattern. That's very relevant to what we're talking about right now because a lot of the stuff currently has timed out in a way that does support rotational symmetry very strongly. And I'll flip between a couple charts to get my point across there. And then the last thing I'm going to talk about is iterations. And iterations is something that I'm going to mention quite a bit. Don't think of iterations so much as copy paste because that kind of makes it sound like you're going sideways, like the same thing over and over again. You are doing that, but an iteration is one that it's a pattern that's found within itself. So it's kind of like the whole definition of a fractal is it's a bunch of different patterns that make up a larger pattern that looks exactly like the smaller ones. And if you go look up fractals on like a Investopedia, it basically says the same thing. And we do see this in trading all over the place. And it's the reason why a lot of people are able to pull bars patterns and they tend to work specific situations, right? They can tend to be very one-to-one because they basically play out a particular trading pattern in a similar way over and over again. But what's crazy about iterations is that they play out on the small scale and the large scale in the same way while they're playing out. So a lot of the stuff that we've talked about over the last couple of years has really been me kind of coming to terms with what I think is the best way to understand algorithmic trading and doing that from a TA mathematical perspective using ratios and other things like that can be very, very efficient. So what are you looking at right here and why is this significant? Well, I find this probably is one of the more significant charts that I've made in a while. Probably not since maybe what I call the mother of all charts, if you guys remember that one from a long time ago. And the mother of all charts was this idea that never really left me, but it definitely wasn't something that played out one-to-one with what we expected to happen. It was not even close in some ways, and then in other ways it was ridiculously close. But the mother of all charts was this idea that you have small patterns that then play out on larger scales, okay? And it was kind of this concept that you're going to see this expansion of what we were seeing over here. So originally, I had imagined that what we might see happen, and these are things that like, I'm going to use a lot of words like might and maybe and whatever. They're estimations, okay? But that this pattern right here may indeed play out on a much larger scale here. Now, was that concept wrong? Well, yeah, I mean, in the end, that's not what happened. So was the estimation of the price action wrong? Yes. But was the concept itself wrong? Well, no. And this is kind of where I'm going to be camping around in this video today, is that ultimately the concept did play out. It played out in a way that I think was a little bit unexpected, but basically, I'm opening this chart for a very specific reason, which I'll get to in just a second if I can move my mouse up. This is essentially like the pattern right here. It started in June 2nd, played out through June 21st over the course of a month. And then that same exact distribution pattern plays out again, June 2nd all the way to November 20th or so. And then that exact same pattern plays out yet again, this time going from June 2nd all the way to the breakdown on August 23rd. Now, again, you might be saying, well, I don't really understand how that's possible. Like, it doesn't seem like that would be the case, but it is. And if you really want to kind of prove the point or push it home, go do a bars pattern analysis of that, and you can see what I'm talking about. Like, take the bars pattern from this area, expand it out, and you can see that basically it matches the second area that we're encountering here. And if you start looking at those nitty gritty, like you start doing measurements and ratioed measurements, you'll find that they're basically identical. And then when you do the same thing on the bigger picture for the next section, and you play it out, again, you might be saying, well, how did you miss something like this? Well, I didn't really miss something like this. I used this. I actually used this area from July to August when I was doing predictions about our August 2022 move. So I used the ideas from that August 2021, and it ended up being really accurate because, it worked. I mean, and this particular setup right here is how I did the diamond bottom. And I have a lot of those videos that are gone now, but I did a very, very thorough analysis on the diamond bottoms by using that July to August. That's what's played out here in the middle. So getting to the point, you can see that breakdown might lead you to conclude that, well, shoot, man, if that's the case, then we're just going to keep dropping, right? We must only be like halfway. Well, this is where we kind of stop and we sort of look at everything else, right? Because it's one thing to say it's iterating outward and that, the next action should have some kind of a drop and then followed by a bottom and then whatever. But then how do you know where that is? How do you predict where that is? We've already have a lot of people that are just saying it's going to just kind of fall off the face of the earth here or whatever. It could be that we're only like halfway, but I don't think we are. And I think there's a lot of evidence to suggest that we're actually on the bottom right now. And if anything, and this is an opinion, okay, it is an opinion, it is an estimation, but we may be in a situation where we're actually about to do this March to April 2022 move. I think it's pretty likely. The main reason for that is that when you start looking at this thing and how it's set up, basically what I did is I went through and I started examining the setup more or less in depth. And I'm going to zoom in on these first two, and then we'll come back out and you'll see what I mean. So basically these setups are the exact same. They measure out to a particular end, all right? The first thing to understand is, well, what's happening on the main stage here, right? And in order for me to do that, I'm going to have to kind of get these few grouped together. I think it's these three right here, but nope, it's way over here. Let's get them grouped together real quick. Yeah, I think it's these three. So what I'm going to do is I'm going to pull, I guess what I'll do is activate these ones. Yeah, those are the ones I want. So I did a manual, the way I did this, which is fine. I'm happy that they're kind of like locked out, but I'm not even sure what this one is. Sorry about that. I know it seems like I'm very prepared, but there's a point to all this. So I'm going to take this out of the group for a second, and I'm going to talk really briefly about the big picture here. So this is basically the pattern that's been playing out over and over again, is that you have a dip down to the lower portion of this really huge downtrend. It bounces out, it goes back and retests about the 50% mark. I say about 50% because it's not really adding up to 50% every time. Early days it did, but again, this is a logarithmic chart, and I think that's probably why we're seeing it the way it is, that it looks like this is not 50% at the end. But I'm pretty darn confident about this line, and there's a lot of reasons for that. I can't tell you that this is exactly what's going to happen, but I can promise you that my chart is 100% as accurate as I could possibly make it, mathematically speaking. So I'm very confident that this is the line. I know you're going to look at that and say it's not halfway here. You're just going to have to do this kind of trust me bro thing, because I promise you it's going through the same markers, and it's very important that it hits certain markers. And then in addition to that, it actually drops through this rotation at exactly the pinpoint middle, and that's going to be really important because this rotation is mathematically like super solid. It is adding up to be essentially like 1-to-1 on the rotation, and it's doing it in a way that's a little odd, but it's been so far like severely accurate timing wise. So pretty darn important to understand that. I know there's a huge amount of stuff going on here, but my point in showing this was this is the rotation, and timing wise it would have given you this top and this bottom a week and a half early in each case, but it would have been perfect. It's rotating right around the pivot when the reverse split happened. So this is a upside down version of what we were experiencing here to the penny. Like, I mean, it's really, really tight. It's happening in that way, and it's demanding in this particular situation a move back to the purple. And we haven't done that yet. So second move back up to the top, which would be around 1080. Okay, and we're going to come back to that later. I just want to show you that that's really important because this goes through that pivot as well. All right, it's part of it. So if you look at the basic structure here, you've got to run up to the top, you dip down, you come up, and then you create those little cat ears, and then you start all over again. All right, and we hit the bottom, and then we run up again, create the cat ears, come down, hit the bottom, right? And this one, you might see it's a little odd because you might say, well, that looks like this. Maybe this is something completely different, or this is part of like the bigger cat ear. It's not. If you look really closely in this area, you see the early little bounces right there, and then there's a big run up. And in this case, it goes up really far and then redistributes back down. It's the same structure that we see right here in this little bounce and this run up. It's like almost like the letter H or something. And then again, cat ears, and then the drop. Okay, so this is what's been going on. And again, after hours, this actually goes up and hits this line like perfectly, like right there. All right. So this is what's been going on for the last 2 years. So we have seen that this has been this gigantic expansion, this iteration. All right. In addition to that, every single time this thing drops down, there's been a really clean rotation. Again, that's going to also be really, really important because I'm going to talk about how that plays into what we're experiencing right now. So I know it seems like I'm not getting to the point fast enough here, but if you're watching this video, it's probably because you want to know where this is going. So I'm hoping that you just stick with me for a minute. This is the rotation. Do you notice how it intersects right here? You see how it intersects those points, like basically perfectly. Now I'm just kind of eyeballing it, but you see how it intersects that middle? This is that rotation. You essentially have on each of these a distribution, and then you have an accumulation on either side. Now, this results in a primary action, right? Which again is like going back up towards the top. So this is really important. There's a rotation, which is a distribution followed by an accumulation along this channel down. This is the pattern that's been happening for the last 2 years. Why would this be exciting? Well, because of where we are now, and I'm going to get to that. So here's another example of this. So basically we have another sell-off going down here. We have a secondary rotation coming down. All right, once again, you see that that's basically a perfect pivot around here. It kind of depends on the way you want to draw it, which you're drawing it to. I don't want to get into the nitty gritty of this just yet. It's not trade secrets or something, but basically this second push up right here that ends up being the higher push up before these double cat ear drop off on the micro ends up being really, really important basically like throughout this whole process. But I don't want to get into that. That's going to be kind of a too much to talk about kind of thing. I could really go into the heavy details about all four of these points and what they represent. Basically, it's the exact same thing, okay? And actually, this one, the way I drew it, looks really weird because I drew it like the rotation stops there. But in this case, it goes farther forward like that. And I know you guys are like, well, wait a minute. That doesn't look right. Now it looks like that 50% is way up there. Again, it's kind of like how you go about like grabbing these points and like which ones you do. And I think I may have even, yeah, I mean, there you go. Stated it wrong, but whatever. Point is, the rotation here does much the same thing, okay? And then the result is that you travel to the other side. I'm not counting this, and I'll tell you, I may not get to why I'm not counting that March move, but that March move signifies something that is unusual, and there's a lot to that, but this is basically the pattern that's been playing out, because I want to talk about and focus on this guy right here versus this guy right here, and I really want to get to that and not like sit around and talk about March forever and ever. March is really important in this comparison. It is, but at the end of the day, like when we talk about what's going on at these distributive tops, August is that distributive top, right? You can see it in the setup here. Like you can see the low mark. There's a bounce right into a low mark, and then you come up and you create that final cat ear, and that's exactly what happened in this time frame as well. This is the jump over. You can see it right there. This is the jump over the M here. See this little M shape? That's the jump over the local creek. And the same thing happens right here. So you get this early jump over, and this ends up being like where you're hopping over that creek right there, like this guy. See that? So that's the same shape. And then ultimately what that means is that when you look at this final bit, this four top, this is 1, 2, and this is 3, 4. So we do get the same pattern, 1, 2, big long sell off, 3, 4, right? 1, 2, big long sell off, 3, 4. Sometimes the final ears come higher, sometimes they go lower. It really doesn't make any difference. Eventually everything gets checked, and sometimes it checks it early, sometimes it checks it later, all right? So the point is that this is a really long-winded, and this is basically from Ape's creation to the absorption, and it's essentially like the same thing that we see here, albeit this is sliding down pretty darn fast, okay? So the point of this, the reason that I'm making this comparison is that I'm trying to show you that not only are they similar, but they're basically, again, doing like the exact same thing over and over again. And that the initial jump that we're looking at is already pretty much finished. Like the initial hit point on this guy is done. It's already hit that, it's bounced off of it. And what's remaining is we're missing this piece right here where we go up and test the 50%. Now, interestingly, from where we stand right now, if we were to just rock it straight up and hit it, it would be like that $12 level that we've already kind of retested. So it'd be like hitting our head against this again. Is that possible? Yeah, it's possible, because technically this guy didn't ever go all the way up to the top. It just comes up, you know, a little above 50%. That's the very first one that we had in July. This could be one of those things where it only comes up to like 1440. Remember that number that we talked about? That would make a lot of sense. And again, there's a lot of reasons why you might see something like that in a push-up. Instead of going all the way high like we did here in March, you might see something lower. I'm going to get into that in a minute. We're 20 minutes in. I know it's kind of going slow, but you're just going to have to kind of like wait on it and see what happens, okay? So the rest of this then looks really weird. It looks really different. You might say, well, there's no rotation here, Booksy. Like, you can't see it. It doesn't seem to be happening. Well, again, a lot of this kind of depends on how you draw this out. The way that it's drawn out right now makes it seem like there's no possible way that these would cross, because I didn't draw it from opposite to the opposite corners. We don't have the opposite corner yet, right? We only have the first one. The opposite corner should be somewhere over here. And you can see that there's an interesting little trend right here that seems to be respected pretty well when we bounce off of it. And it seems to be heavily respected right now. And we're going to have to come back to this one a little bit later. I do think that this is likely that trend. Does that make sense? Like, this is likely the trend that's coming across that's going to signify where we eventually go. Because as you can see, when this guy pushes up, it ends up coming back beneath there and then pushing out again. The same thing kind of applies here locally. This actually pushes up against that trend. It's really hard to see it, but there's a little bounce here that pushes up against it, and then it breaks out and comes back down. So this pushes up and then breaks out and comes back down. So I think right now we're in that period where we're basically trying to come across that trend. And then we're going to push out and then come back down. Okay, and we're going to get to that again in a little bit. The rest of this might, again, seem like a little confusing, because you're like, well, even still, Booksy, like, even if that was the trend, this could be one of those things where it's like, well, it's way over here, you know, like it just doesn't seem like we're there yet, right? Like, how can we know for sure that we're there? It could be like way over here and take forever. Well, I decided to go about, and I know you guys are probably a little bit lost because you're like, well, I get that part. I don't really understand what you're doing here. I'm trying to demonstrate that they're the same, okay? And I think that I've done enough of that I'm not gonna sit here and like do that forever, all right? I wanted to show you this because it's really important to understand that there's a lot of space between here and the top, right? A lot of space between here and the top. We've already had distribution 1, distribution 2, distribution 3 along this top. We've had bottom 1, bottom 2. Now we're really looking at bottom 3. So the big takeaway here, if you don't want to kind of get into the nitty gritty with me on the rest of this video, is that basically we're in the third bottom. All right, and if you ask me about my opinion about it, I think we're just missing this push up where we should be going up to retest this midline. And it's very low right now, but I think that's what we're looking for. All right, that means that the midline's pretty low, but I do think we're going to get an extension above it, and I'm going to talk about why in the rest of the video. But if you were just going to talk about like, well, what's the basics here, then this is it. All right, this is your basics, is that if you look at the center of these three structures, we basically have just created a very long, kind of boring sine wave down. Okay, now I'm not an Elliott wave guy. I'm not going to count these things out. If you're an Elliott wave person, you want to count them out, go for it. But this is basically what I'm saying is happening. Okay, 1, 2, 3, 4, 5, 6, 7, maybe 8. I don't know. All right, 1, 2, 3, 4, 5. I don't know. Okay, what should happen next is that at some point in the future, we should be coming back to this top. And that's the thing that everyone's been looking for. I think initially we were looking at 45 because of that gap. And if it were just going to come back and fill that gap, it would happen in like April of this year, all right? But there's a lot of other measurements that I think are important to take into consideration, and we would have to go through and like look at everything. So the reason this video took me so long to put out, why it was so late, is because I really went through pretty much everything, like everything I could possibly go through. And I know this looks really complex, but it's actually as best as I could possibly make it. Okay, and there's two main scenarios here, and there's a third scenario that's kind of in the middle, and I'll get to that one. But the main scenario is up, down, and then the middle one is really like an up-down mix where you go up a bit, you just don't go up as high. All right, so those are the two main scenarios. And in every situation, I really think that up is the most likely next move, okay? even though, yes, we're in kind of like a free fall mode, we could still go a little bit lower. That's what I think. So here's what happened in 2020. In August of 2020, you got that bounce, and then you push up, and then the cat ears form, but they form in a reaccumulation because they jump the creek, and then they go. And the same thing happens here. You get the bounce, you get the push up, you get the bounce, you get the push up. But when it comes back down, each time it gets to this midline, it creates those cat ears and then drops and does an S curve. And then you end up running up in what we would call like this next move, right? There's no advancement. Instead, there's like another buy-in, and it's a secondary distribution, right? Each time you go into the cat ears, and it's really long-winded. When you look at the structure of these bottoms, they're exactly the same. In terms of like the math setup, the main difference is that on these bottoms, you get that bounce and it comes back up. Instead of going here and rejecting, right? Instead of going here and rejecting and then coming through like that, you do this, right? This is the main difference between these two bottoms. The motions themselves, and if you generally look at the fractals themselves, they are the same. And we've kind of known this for a while. It was one of those things that was really harped on back here in November, was this setup was so similar in comparison, but then it broke down. And the main thing is it's dropping beneath, on that final thing, it's dropping beneath the uptrend. So there's always a prevailing uptrend right here, and this is the drop beneath it. And ultimately it drops beneath like 50% anyways. This is long before you get there. When you get to this distribution early on, you drop down more than 50%. You lose kind of the momentum on the slide. So the setup is essentially the same, and you can see where they deviate. One way to really kind of bring this one home, this is kind of like maybe change a lot of the way you view and understand this particular setup, is if you look at the way in which these kind of push to the upside, you'll notice that every single one of them does like the same thing, is they have this like push up, right? This early push up right here that comes up into a double top and then slides back down beneath it. And if you just look at this guy really close up, you have to go way in, and we'll get there because we're going to have to look at it. But you'll see that it does the same thing. Like this one, you can see it right here. There's the push up, there's the double top, and then it slides back down. And then even closer on this one, you have to really like zoom in. I know it doesn't look immediately like visible because of the time frame, but it's there. There's a push up, the double top slides back down. And then what you find is that each and every time this happens, there's a return back to the top. So when you look at what happened in the big January move, there's a return back to the top. When you look at what happens here in this particular move in July, there's a return back to the top. In this case, the top is not very far up. It's actually like pretty low. And so when you see this push up, there's a double top, and it comes down low, and then it pushes back up. You see that move right there? So this is the bounce out, and then the drive back up. And during that bounce out, they establish that trend line. Let's go to 1 hour. Maybe you can see it on 1 hour. And I would love for you to see it because I want this to be very clear, like that when I did the analysis, that's what I was looking at. I was looking at like really driving this home. Like I don't want this to just be like another chart that's going to kind of go by the wayside. I think there's parts of this that are going to apply to everything that is looked at in the future because it needs to, if it's true. Okay. And if it's not true, then, whatever. I'm wasting my time, I guess. I don't know. Yeah, I'll take a look. So you can see the setup when we zoom in. And it's important for us to get closer anyways right now because we're going to look at these two. This is the same thing. So you get that double push up, drops back down, and then again finds a support and runs back up to the top. Now what's interesting about this, and this is where we're going to start doing some measurement comparisons. I've got a lot of interesting little measurements here. So these are just like boxes that you can use to help measure out moves, all right? First thing you'll note is that the main move down, right, that 50% ends up being roughly where this kind of middle structure is. Okay, you can see that. But another thing that's really interesting is you see that midline right here? That midline's that blue line that cuts through it. That's the midline on the whole structure. Here's what's really fascinating. Mathematically speaking, this guy, hold on, if I can get the silly thing to cooperate. It doesn't want to cooperate. I'm not grabbing the right one. This guy right here, if you drive to the lowest low, so you go from the high here, and this is on this particular marker, and I'm going to use the same marker throughout. It's basically like the third marker, but I had to identify it for each one. If you go from the high to the low, and then you go from there to where this is the highest right here, this ends up being like exactly like right in the middle, okay? And then what's interesting again further about that is you can do the same thing on the bigger kind of iteration of this. You can go from the high to the low, so this is after the big bounce. And again, if you take this and kind of wiggle it around, it's easier to see it. You'll see that it drives again right back through that center point right there as you get to these up thrusts. Now the reason this matters is because all I'm doing is I'm establishing like a proportion, and I'm trying to see like proportionally if it makes sense within itself, and it does. So I'm using things like RSI to help me determine like where certain things are. But the main point of this is that when you get down to the nitty gritty of it and you start looking at this, okay, this main structure here from the first bottom to the top, it creates not the second bottom. The second bottom is actually the lowest. That's the one that happens right here in July. The first bottom up to the top, using that kind of middle, right? That's the middle where basically you have the highest high. So that's your 50% marker. That's the second ear. In this case, it's not always that first push. Sometimes it's a second push. And you use that, it creates an angle, and that angle ends up being extremely accurate for predicting that next big move, right? So basically from that point forward, and I kind of messed it up because I had it on here, but I did this on a smaller time frame. You get that slingshot move where it drives down and pulls up. I did a whole video on slingshots. I'm not going to talk about that like in that much detail right now. But the main point is that there's a lot of things here that help kind of drive the point of where you're going to go in the future. You've got like basically a lot of speed lines that kind of indicate you're going that way. But these boxes end up being really useful. You just have to make sure you draw them correctly. So from the bottom again to the top, where the top ends up being the 50% on the box, that gives you an angle of trajectory. Not surprisingly, that angle of trajectory is respected on the way up. It ends up being that catch-all right here. So that orange line where that box kind of helps box it out, that ends up being respected as the angle of trajectory. And then later, we find that that's where it ends up going. Okay, so why does that matter? Because I did the same thing here because I knew these two were already comparable. I'd done the comparison before. I just wanted to find like a motif. A motif is like something that's repeated. All right, so I wanted to see if there was a motif for this, and there is. It's the same deal. So once again, bottom here, you can see right here, there's a smaller square. All right, I'm not going to talk about the bigger ones like every single time. I'm just going to talk about this main one right here. This is the one that people are going to care about the most. The other ones apply though. They're still relevant. You know, again, taking it from the third point down to the bottom here, you can see like there's clearly like the same exact things are applying, right, that we were talking about before. This ends up being a really key 50% marker for this whole downside right there. So this actually does tell you early on that you're going to move 50% beyond this point down, right? But you'd have to have identified that early, so it's kind of tricky, right? But this one right here, which is the orange guy, again, like it's pretty much perfect. On this double top right here, you can see that there's a push up, pulls back, it touches the orange marker, and then moves on. And then if you look really carefully, you can see what I've done here. I'll try to highlight this for a second because this one's a little easier to read. So I'm not like, zooming in and out of it. But you can see right here, this orange line that cuts through this structure ends up pointing to the top again in the future. All right. Now you might say, hey man, it doesn't go through that point exactly. So, you must be kind of wrong. Well, I did this on different time frames. You can see that all these lines are like slightly off. The main thing is this second push up on the RSI. That's going to be really critical because I used that on the first analysis and then I did on the second. And you can see it's respecting this right here, drops away, finds it again, bounces, respects it, drops again. That's the main line that you need to figure out where this slingshot is going. Okay. And in both cases, it's the same. All right. And then the slingshot itself, this is an interesting thing. The slingshot itself actually also has a really tight measurement because, and again, I've done did this video like a long time ago, but basically this whole structure is centered around this 50%. You can see the box. This is contained, right? There's a whole lot of cool stuff that you can do with these measurements, but the big thing is this guy, the corner of this box ends up being like the 50-50 for the bigger structure, and it ends up cutting right through it. So this whole structure ends up being like really, really simple to understand. So then you come to the modern day version of this, right? And there's a lot of other stuff we could talk about with trajectories and whatever, and these creek crosses. I've got a lot of lines drawn. A big one right here is this orange guy coming down. That's going to be really relevant when we get to where we are now, because notice that this takes off right after this little M cross of that guy. Sorry, I can't skip that part. I forgot. That's really important. This right here. This move happens after this one is met. Now you might say again, well, how in the world do you get that point? This is super cool. All right. This is super, super cool. So this bigger one is really, really significant because, man, you guys are probably like getting a little lost right now, but notice that the upper point here is that third marker right there. So there's double cat ear up once, drop down, double cat ear twice. Okay. That's the final little area. Okay. It comes off this sine wave as well. You can see the sine wave being respected. There's a cross of that sine wave, but it doesn't ultimately run. The sine wave is the blue line. It doesn't ultimately run until it crosses this particular creek. And what's fascinating about this one is it's totally predictable because you can see, even though it doesn't respect these markers, this M cross is where it ultimately is respected. And again, where does it come from? So you take the box from the top of that mark and you find that this doesn't really work any other way. Basically, this is the 50% marker right here. You see this high push up? This gives it away. Now, that would be something if it were like not provable, right? Like if I couldn't actually sit here and be like replicating it, you might say, well, man, that doesn't mean anything. Like just because it does it once doesn't mean it doesn't do it again, right? Well, here you go. So I decided to do it twice and just make absolute sure that that's what I was experiencing right here. And basically, yeah, it's the same thing. So I didn't like fudge anything without going back and like looking at it again. Okay, these end up being like really significant cross points for this whole chart. All right. So when I look at this on the big picture, it's important to note that like I'm using both of these every single time. I'm not doing anything that isn't replicatable. All right, does that make sense? It has to be repeated. So big cross here. So basically you can see those two orange lines. They're very significant. All right, the fact that this comes up as high as it does, there's a lot of things you could say about that, but it makes sense with the structure that's given. All right. Okay. I know there's a lot that you have to sort of take at face value when I'm doing this, and I can't do it any other way. Not right now, but I will say that I appreciate it if you just, take it at face value for now. I'm happy to do a more robust analysis of this, but honestly, it took me like hours and hours and hours and hours to kind of set it all up. So yeah, so here's the big box, all right? And this is basically where I'm at right now, okay? So I've got this box set up in a way that there's a lot of different price targets here. I know that it's a little bit confusing, but the main reason that I did it this way is I'm trying my best to make sure that everything I do, makes sense in the grand scheme of things, okay? And in the grand scheme of things, what we're looking for is that this connection and this connection both meet a bottom, right? And that they both essentially hit that 50% marker. Now, here's the problem right now, is that there's actually no possible way to do that. Based on everything that we've done so far, you might say, well, man, it seems super simple. Like, just find out where that is, find that, and then where it intersects in the middle, and you might be fine. It doesn't do that, though. And I think the reason is because of the shift that happened on the chart. Not talking about the reverse split, but the shift that happened right before the reverse split. I think it dropped all of the values down slightly, okay? So a lot of my things don't actually match up, but what I did is I went with what made the most sense and what was the kind of like best practice for this, okay? So once again, when you start looking at it after looking at those other ones, you can see this structure is essentially identical. You move up, you catch on there, you drop beneath it, you push up, you do the double top, and you drop back through it. As a result, all right, this ends up being probably one of the most critical, if not the most critical, boxes that we have right here. So what I've done is I've drawn the trajectory right through it. Again, I know it's a little hard to see, but you can see right there I've got highlighted little blue dots. I've drawn the trajectory right through it. This should be the trajectory line for wherever we're going to hit in the future. Is it really that high, Booksy? Yes, it is. Because this is so incredibly steep. All right. And then you would look at something else. You'd say, all right, well, where's that high point? You see that marker right there? That's the high point on the RSI, the second bounce. So if you recall back here, after it drops that marker, you see that? After it drops it, there's a recovery. And that recovery ends up being a high here. Now, interestingly, this recovery bounces up really far. And it does so in a way that reminds me of what I was predicting that didn't happen, that I thought might happen, which is that return back up to the top here. It almost looks exactly the same on the RSI. If you look at the RSI, that drop looks like it comes up basically right underneath what would have been like 976. You see that? But because the RSI got there first, it doesn't actually ever get there, right? It ends up not having the strength to get up to that high point. And that might lead you to think, well, there's no way then it'd have the strength to do this. You might be right, okay? But the point is that that's the marker right there, the yellow thing right there that I've got right here, this vertical line. That's that midway marker. So because I have that, I can then create a much larger schematic, because you remember the slingshot itself has to fit in with that box, and that midline marker ends up being really important for the slingshot because it's like the halfway point. This is where things get kind of interesting, because there's basically no way to draw this where it's really, really, really low. So this is now that marker where you have the halfway point. This is halfway through the larger structure. You see that? And I've got it right on that dotted line because that's that bounce, okay? That needed to happen. But notice that no matter what you do, you can draw this like super low, I guess, if you want to. But even if you draw it like really low, this thing would still be coming up to like 1440. And that would be like assuming that this is the midpoint at 890. Right? And if you look at the previous structures, that's never the case. It's always like about halfway up this bounce. This ends up being like a 50%. This happens every single time. Right here, this is roughly like a 50-50 up to the top. back in this area, you might say, well, I don't know, man. I didn't really look at that one that closely. Are you sure? Yeah, here it is right here. Notice that this initial bounce is like a halfway point right there before it drops through and then it comes back up. This is basically a big old S curve, right? And the first bounce is like the halfway point. So if you look at it that way and you see that first bounce is like a halfway point, then the rest of the retracement would be another 50% to the upside. And this is all kind of wishful thinking, you might say. Well, maybe it isn't going to happen, but the fact is that the chart does support it, and I think that that's really, really important. I understand that supply and demand don't come out of thin air. You have to have buyers. But right now, if this is the 50% up and this is the 50% out, and we've identified it correctly, then we could pretty easily say that, yeah, this should be going to $22. Now, you might then say, well, dude, that looks cool and all that jazz, but didn't you say that that midline ends up being the boxed midline for the next one? Because that was replicated basically twice perfectly. And the answer is yes. So here's where things get kind of tricky. I was working with this, again, pretty religiously for about a week. And what I found is that there's not really like a perfect way to do this. So no matter what you do, that early box would have to be, you can mark it here and that could be like the 50% at like 10. It would be like $20 basically, if that's the case, or excuse me, $17 if that's the case. So you see how I wrote 17 to 20, 22.89. The reason I did that has to do with, well, like a couple things. But the main reason I did that has to do with this orange line. So assuming that I'm not completely and totally wrong about that orange line theory, then this would only come up to like $17, right? It wouldn't actually come up to 22. But that being said, if you look at the distance in terms of 50/50s, then there's no really any way to avoid having it go way higher, because if it is 50/50, even on like a lower estimation, this should be going up to like $21. So it really just depends on which one is kind of like more accurate. So what I've written is I said that 17 to 22.89, this currently is measured out to March 1st. Now you might say again, how did you do that? Again, timing, one to the next right here. Okay. This particular move, I did all the other measurements that I could possibly do for it for the slingshot, and this is what I came up with. Basically, that there would be a low of about 556. The reason for that, again, has to do with that 50% marker, where it is, right? The 50% has to kind of cut through, right, the middle of that orange line. And again, it's possible that if you drag this up more and you think that, well, this is already done, right? Like clearly it's already done. Yeah, I mean, it changes the target, but even if this is like the low that it gets to, there's other things that like didn't really add up with that. So what I did is I went about it in a very like averaging kind of way, okay, to try to determine which one was the best. So what I found is that basically this seems to me to be the best, where you have sort of the best of all things. All right, it's not perfect, but it's pretty decent. Now, there is another possibility, which is this takes way, way longer, and we've actually not even had that middle line kind of advancement yet. Right here, this is early, and this is some kind of a bounce, and we're still going to get that middle line advancement. But the thing is even if that were to happen, and this ends up being like a middle line thing, and then it goes down again, even if that were to happen and we have to adjust everything, it doesn't really add up, because the orange line still would be really, really high. So even if this jumped up and then dropped back down and ends up going only to like 9, and then you drop and it ends up being, no, that's the middle line, Booksy, this is not right. Proportionally, it doesn't really make too much sense to me, but it could happen. If it goes to 9 and then drops back down, that'd be a complete completely different setup. What we would do is then basically assume that we just got the middle one. It's this big long structure, and then we're gonna end up having this like massive drop, like, but also a massive run up. And this is the area that would then be tested. So, anyways, my point being is that I've done the best I can to estimate what I think is the most accurate and most likely setup here, based on everything I know about the previous setups and doing all the math as best as I possibly can. And what I essentially have run into is sort of this conundrum of like, it's even if it drops low, like the lower it drops, the higher it goes. That's the nature of the slingshot. So even if we were to get some like ridiculously shallow bounce and then drop back down, and I know some of you are like, well, why do we even bounce at all? Why if we just like sell off and just go really low? Because I think that we're on the line. Like, I don't think that we're going to go about this in a really fast way if we're already on that trend. Unless that trend breaks, this should be the bottom. And it doesn't line up with anything else we've seen to say otherwise. Because again, unless this is like just a complete and totally new thing, we're essentially experiencing this kind of a bottom right here. The only thing that could cause this to go kind of haywire is if this bottom is just like what we're seeing right now is just like an early stage, right? Where we're going to push up and then drop really low. But we probably wouldn't even know because like we would just think it's like the bigger picture, right? And still, nevertheless, like this would apply, right? So I have a lot I could say about that, and I'll have to do a little bit more on like analysis about that, but yeah. Basically, for right now, I think this is probably my best estimation. That it looks to me like we would do some kind of an early quick advance, possibly to like 17, possibly to 22, sometime by around March. Now, what's interesting about that, you probably have already guessed it if you haven't already, is that's basically earnings date. I didn't know that at first. I kind of have in the back of my head that that's what that was. But I kid you not, like I did this without knowing that. So for now, like that's kind of in my mind is like, oh crap, like I did this without knowing that. So if this crosses this particular trend right here, I'm going to be, in my opinion, buying in. Now, it's not like financial advice. You guys shouldn't do that unless you feel comfortable doing that and you do your own due diligence about it. But this M cross would basically be a retest if it does what I think it's going to do and kind of slides down for a couple more weeks. We're really either right on it or we're about to be on it. But I think a couple more weeks down, and then we basically have a reaccumulation period. You should see a big push up. Now, could it be earlier, like over here? Yeah, and there could be a little bit more sideways here at the top. This could be a lot longer, right? The thing is that the recovery needs to kind of match this trajectory. So this is a mathematical trajectory that makes the most sense. It's basically a cross section of this. I don't want to get into that either. But what it would look like is a push to like 630, drop back down to like 590, push up to 705, which makes sense because that's the bottom, drop back down, recovery at 630, and then break out. And at that particular point, you've jumped all the major creeks that you need to jump on all these downtrends, okay? And you're heading back up to the top. Now, why does that matter? Because the rotational symmetry actually has us going up and hitting a high around January 19th. Now, you might say, well, that's completely the opposite, right? Yes and no. It is the opposite. Like, it doesn't really work that well if you think about it in those terms because you're like, well, shoot, that's completely backwards. Like, that's super early. That says it's going up here and hitting the top at that point and then possibly coming back down. Right. Well, that's the thing, is that when we take a look at these, they don't actually add up to be perfect. So I know it's confusing, But this rotation says that you're going to hit this particular mark on the 18th. But the thing is that we've not hit really any of these at the right time. Like we've hit them basically in the middle, like a little bit early. So every time we've come to one of these tops, if you look at like where the top actually is, timing wise, it's always been like slightly off. So if you come here and you look at the middle point, you can see that this actually double tops, and the middle point where it hits is October 23rd. It actually got there early. It got there on like the 12th, but then it really doesn't hit the peak until like 2 weeks, 3 weeks, 2 weeks after the estimation. And the same thing applied here on the downside. When you go here and you go to the downside, you can see that it actually got there a little bit early. So the estimation of where it's going to be there and when, it's estimating it's kind of like slightly off. It's really close, but it's not quite there. And then if you look at the next time that it hits the top, this is kind of where I'm getting to, right? Is like, it's basically in that January 11th period, and there's like a whole nother one way over here. You can see it's like way later. So it just depends on whether or not this is the actual push up to the top or this is, and we could debate that all day. And how long does this actually go? I don't think it's going to go past these two right here. I really don't. I know it says it goes back down, and so you'd think it'd go back down. But I don't think the rotation is going to go past the cat ears, because this is that part. Remember we talked about that rotation? We talked about it early on in this video. I know it was like forever ago. It's a long video. But this particular rotation has to do with this kind of bouncing, U shape right here. But there's also a smaller one right there on the end. And I think that rotation is what we're seeing in that bounce. So I actually think that that rotation is basically done once this bounce occurs. So you have... Let me try to show you what I mean. I think this is like the main rotation, I guess is what I'm trying to get across. If I can get it to do what I want it to do. Yeah, this is basically the main rotation right here. This bounce, this is like a U shape. This is bounce. It's a little more like a bouncing M shape. Okay. And then the rest of this, I think, is subject to a whole lot of scrutiny. But it does suggest, yes, that we should have been at a bottom here and then advancing, potentially, right, up into about the end of January. All right, so does it fall in line? Is it close enough? Does it seem like that makes sense? Yeah, because this would be advancing up and through the end of January. But the thing is like the more, again, I look at it, the more I try to like figure out, well, where is it going to be and blah, 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 blah. It has to kind of make sense within the structure that the iteration is going for. Because these rotations, the measurements on them are pretty darn close, but they're not like perfect, you know. The same thing applies to like these guys. Like the rotations are pretty darn accurate. You can see like the midline is right there. It's on the middle. But in terms of timing, that's a little more suspect. Like right there again on the middle. All right. And I think that there's ways of looking at this that's very, very strict, you know. And going to the middle here, there's not really an easy way to kind of identify where it should be. You can see that it does adhere to that principle though, even here to here. It's still right in that middle. So I do think that that's really important, but I need to stress that that's like not the only thing. So I've done a lot of different stuff here, and what I started to find is that this is a Fibonacci expansion, and this is kind of where I guess the video needs to end. It's been really long. This is as short as I could make it for now, okay? Basically what this suggests is that if this were to repeat again, we would have some kind of a push up around February, maybe going into March of this year, and we would probably only get to at most 22, maybe 17, and then we would sell off again. Now, what's weird about that is that before all this crap happened, we had a price target of $19 to $21. I don't know if you all remember that, but that we would come back up and check that ceiling again, because that was the original high for the stock. So what's weird about it is that I thought if it was going to go down again, it would have to redistribute above the original kind of place where the high was. And I know it's confusing because you're like looking back on it, you're like, wait a minute, wasn't that like $21 or something? Yeah. And it's weird because there's a lot of other stuff. But I said, I thought it had to come back up to that point. That was the amount. And it says 18 now, but it was like different before that shift happened. I think it's basically the same target that they're coming back up to sell off against. And you might say, again, that's kind of crazy. It doesn't make any sense because it's not actually 17. Well, I know it doesn't necessarily make a whole lot of sense share values wise because it's changed so much. But if that's where they think that value was, like that's where they think that's where the high should be, it shouldn't be any higher than that, it might still work out to be that way. I haven't looked at the comparison in a while in terms of the market cap, but it could be that that's the market cap that kind of matches. And I'd have to go back and look. I know it doesn't make a lot of sense necessarily on the surface value, just looking at it, but I'd have to go check. Okay. I just think it's odd. It's very similar to that price target. So what this would suggest is that you basically push up. And what I did here is I took a Fibonacci expansion and I worked it with fib timelines here back to the original breakout. And this is going to kind of hurt your brain a little bit, but you can see what I'm talking about. It turns out that the waves, these waveforms, are indeed timing out on the Fibonacci time frame. There's only one here that doesn't quite work out, but it also might be that the Fibonacci starts later. I know it sounds weird, but when I went back and I checked, it checked out. If you go from January, where that breakout happens, and then you map it out, you find that it does work. So the waveforms themselves are actually Fibonacci based, and that means from here to here it's the same. And so what I did, from here to here to here is Fibonacci timeline. So 1, 2 to 3, it's falling in line. So what I did is I did the next expansion down, and it would suggest that we're going to hit a low. And by low, I mean that this is like the bottom, the trough right now. The trough would last for a really long time, from September basically of 2023 all the way through December of 2024. Now, interestingly, that's right around where elections are, and that we'd be at a low. I had actually said previously that I thought we were probably going to hit a higher high by November, because that was the early measurement that I did, and it measured out really well as well to being November of 2024, which made sense to me that there would be an election run. But this is very different, and I know this is very different, but I do think this might be more accurate. It just depends, okay? Because there's one setup that I'm not really talking about, and that's this one. And that's the January setup where we have a big pump, right? It's this move right here, but instead of selling off and going back beneath that marker, right, that previous double top, we actually hold above it. So that would be like us pushing up to $23 and then coming back down and holding above 12. And if that were to happen, this all kind of goes out the window, because then you're basically just going to move up to the top. You're going to go back up and probably check $34. So we drop down and then sell off and then go back up and check 34 to 37 by about middle of the year. That's roughly the way this would go. You can see that the orange line here, that's actually what happens, is that you go back up to the top. This would be how you get to $40-something, $45, right? And it has to hold. So there is a setup here where you get a push and then it comes back down, it holds above 12, and then it pushes back up to the top, okay? But that setup has to be that has to be at above where it pushes up and then holds above 12. Okay, essentially. If that happens, then it's likely going to go to 45. If it doesn't happen, then I think that we're probably just in another one of these iterations. It's already happened twice. I think it's going to happen a third time. If you check the iterations, it's 1, 2, 3. It's actually already happened 3 times, but I'm only using the bottoms, these 2 bottoms. So there's technically 3 bottoms, but that one's so micro and compressed, I can't really study it. This is the only other bottom I've seen like it, and it does have the same slingshot principle that we see right here. Exactly the same. So we do know that it's happened multiple times on this stock. So there's at least 1, 2, 3, 4 examples. One of them's too small to study, so I'm not going to study it. Okay, so I think the slingshot is a pretty darn accurate way of looking at it. Now, could I be wrong about where we are in the scheme of things? Yes, but I think based on this whole setup, I don't think we are. I think it's still the same. I think this push up to hit that top was indeed the second ear on this bigger, setup, distribution setup. This is what you see in the middle of those distributions. You see the whole sequence play out, and then it drops, unfortunately, right? If it doesn't break out of the creek, and it didn't, all right? So I think we're back to the bottom now. I think we're still using the same lines. I think we're in the trough. So you'll note that this is basically the setup right now, is that we essentially are going to have some kind of a middle structure here, probably over the next 3 to 4 months, maybe a lot faster than that, but we're probably going to have this middle structure here that's going to then drive us with some big distribution, if it doesn't hold above 12, back down to 250. And that 250 price target, as best as I can see it, would go essentially all the way down. If it's going to look like the previous 2 versions of this, would go all the way down in June. And at that point, interestingly, you can see that we would have jumped this last kind of downward creek and then come back down to test it. I think it's pretty fascinating. You might not think it's that fascinating. I think it's pretty fascinating. I think this particular move is bizarre looking, but again, mathematically, it actually is exactly the same as this one right here, which is kind of cool, but kind of frustrating. And then when you look at the remaining of this, this would be like a buy-in that would happen low. You can see that the setup for this gives you a very clear kind of reason why you would come down here, right, to accumulate lower. And this is kind of that lower quadrant, right? There's a bunch of these quadrants that you see, like they're basically equal parts right here. Quadrants. I'm not sure why I'm saying quadrants. They're basically just levels of support. And this is the lowest one that we could possibly think of. So these are the bottom 2. We're kind of in that one right now. And then this would be the lowest one down here. They're equal parts all the way up to the top, percentage-wise. So this makes a lot of sense to me, because if you were going to drop through here, you'd probably come back up, redistribute higher. This redistributes at the second or the next one, and then drops through, right, and goes down to the lowest. And at that point, you then reaccumulate, and then when you break out, you climb back through the next 2. That's the same thing that happened right here. I went ahead and checked it because I thought, well, look, see, if it sets up the same, it has to work out, right, where you can get those price targets the same way that you did back here. So you can see right there that purple guy. I know it seems like it's a little all over the place, but that's just kind of the way this is when I'm doing like this kind of cumulative thing. So I took the measurement, and what this was a measurement from the hook down to the liquid center here, which was beginning on this bounce down. And I did the same thing here. The hook is really high. It's way up here at like $34 down to the liquid center. And it adds up. Basically, as soon as you get back to the wave, this measurement is the exact same measurement. And it basically goes from $4 all the way up to 19 again. and it's slightly low, which is kind of interesting. But that's where it intersects that wave. So jumping over the creek, again, I took the same kind of format here, and I looked at it and I said, well, it has to be basically the same. And in order for it to get back to the blue, right, it'd have to intersect at this blue at some point. It could be way lower. It could be over here somewhere. But this makes sense. And again, I took the measurements based on some other stuff here with these waves, right, and where that 50% is. And this is where it would intersect $21. And this is way later. This is basically after elections. So elections would be essentially what spurns this kind of big run up. And then you'd end up being up the high by 2025 back to $20.20. And this is where I think there's going to be some controversy. But I noted that in August of 2020, we were at $20.20. This is the marker right here, this $20.20. Why is that important? Well, that's, from what I can tell, that is the place that when we got to the reverse split, that's where we first distributed from. You have to go back and look at where that sell-off happened, and it pushes up to $20.20 and then drops. And that's the day of the reverse split. So what I did is I marked it off. This is in August of 2023. We hit that 2020 and then we dropped. If you go back to August in the year, where is it? August right here. We're basically hovering at $21. Okay, that's right here. So I marked it off with this little marker right there. Weirdly, so if you think about it in terms of the chart and you think about it in terms of value, we just did a big up, push up, right? And we're coming back down and we're at the same value. So the idea of this kind of swing around where you come back up and check that makes sense. Now, is it gonna happen twice? This is the sort of the bigger debate here. Well, I don't think it does have to. I think that there could be a time where it doesn't, and that we may not get back there until 2025 in April. The thing is like right now, and this is kind of the last scenario. I know I said I'd make this quick. It's been really long. But this is the last scenario. Okay. The last scenario is that you don't actually breach this top. And I kind of talked about this before a lot, but basically you come back up, maybe it comes up to like that 1440 that we talked about, and then it starts sliding down. The reason why that's possible is because there are situations like back here where it didn't actually come all the way up that high. It came up pretty low and it hit that orange line early. And so if this were to take off early and it hits that orange mark, I don't necessarily think it's going to continue. I think it could be that was it. This could hit really early. So if we took off like super fast, jumped this creek early at 7, and we head on up, I don't think it's going to go over 1440. And I think I'm going to be in that situation where I'm like, oh, well, hey, I called out the 1440 mark, and that's where it went. But listen, if it goes there, and it goes there earlier than what I'm saying right now, I think that it's likely going to just sell off and then head back down. I don't think we're going to see this higher mark. On the other hand, I think if it takes longer and we leave later, that means we leave in like mid-January, and when that first advancement kind of slows and does an SOS around $10, we're going to make that next big move. It's the difference between like all three of these basically is they all have like a different kind of extension. They all go to the orange mark, but some of them go much later, some go earlier, some go through it, and then they all distribute down past the midline again, but this one, right? So this situation that is kind of like earliest, where you push up fast and by mid-January we're already up at 1440, that's the one where I think we're likely going to see it come back down early. And And that's the one where I think we don't actually get to $20 until 2025. To be honest, I think it sells off and it stays really low in the twos, maybe even lower. I know I've talked about one, but I think it sells off and stays low for a long, long period of time, and then it doesn't break out and come back here until 2025. Does that make sense? So 3 situations finally. I know you guys are like, man, this is way too long. It was, but 3 situations finally. Okay. Situation number 1, okay, is that it takes a little bit longer. You get to January 19th, you see a breakout. It runs up, it gets to about 12, creates an SOS, and then pushes all the way up somewhere between $17 and $22. All right, no guarantees there. I don't know. 17 is the most likely target. I think everything else is kind of bonus. All right, situation after that then determines whether or not we go down or we go up. So if it drops beneath 12, I think it's very likely that it's going to start selling off and head really low, down to like 250. If it holds above 12, and it can maintain support over 50%, then I think that we're going to get a little bit of a longer reaccumulation here going into May. I think it's likely then going to push up and go all the way back up to probably around that $40-something mark. I'm assuming it's going to be 34, all right, around July or August of 2024, all right. If, however, it sells off, we go really low, then we're in this longer scenario where I don't think we're going to come up and maybe not ever break out, but probably not at least until 2025, okay, where we're going to come back up to $20 again. So we'll be in the lows for a while. The other situation is that we push up early, we hit 1440, and then we sell off. It's very similar to the other one. The only difference is that at that point, I might have to go back and just kind of assume that we hit that bounce early, and then I might have to redo the map a little bit because I don't know if this is going to apply the same way. This is based on a push up to that orange line later. That makes sense? So I'd have to redo it. The good news is we'd have another point of interest. It'd be a lot easier. Okay? So those are my main scenarios right now. 1440 and then a drop, slide back down to lows, in which case I'm going to change this. The bigger scenario, push up to about 17, then drop down really low, unless it holds above 12. Now, why don't I have any scenarios where it just continues to drop here? I don't think it's going to do that because I don't think, and I know this is going to go flying in my face if it does continue to drop forever and ever. I don't think we're going to go below like 550s right now. I've been talking about 490, and it's possible we can get down there, maybe even like lower than that. But if it does something like that, then the setup changes in some ways to the benefit of bulls because we've yet to make any of these necessary checks that we've always made. And you might say, well, that's kind of true, but, there are some times where we don't. No. There are no times where we don't make those checks. Like it's with this short operator, when we come down real low and run away from these checks, we always come back up. Like always. You can go back and you can look at these, we've always had these great advancements, they've always happened, right? To go back and check. So for us to kind of just like leave this and not come back and test it is very, very, very unusual. Even if you think that ultimately this thing's going to $1, you would still say that there's not really been any evidence that this has done that kind of a sell-off for that long without coming back up in a massive distribution. It just hasn't. The only time we've seen anything kind of like, I don't know, maybe this area with the drop, but like I'm saying, like the rotation even demands that you come back up to 12. So there's really not a whole lot here that doesn't say you're going to move at least 100%, and that's kind of crazy to me. But that's kind of just where we're at. I know it seems a little out there to say something like that, but I frankly, like, even if we did start dropping now, like, there's just no, unless it's going bankrupt, like, within the next year, there's no rhyme or reason for it right now. Like, there's plenty of time, and the RSI is really, really low on the bigger time frames. It's still really low. So I don't see it happening. We've got a lot of different divergences right now that remind me of the divergences we had back here. They're very strong. So I feel like I don't really have a super low scenario. I know some people are talking about 450s and other stuff. I'm not saying it's not possible. That's silly. Everything's possible. We could see it drop low and keep dropping low. But what I am saying is that at least the way it's set up right now, it doesn't seem like that would be the case. Unless we're just going to set up for like some massive move after that. You know what I mean? Because that's all that's left. Like, is to go back and check all these levels that we skipped over. So that's kind of where I'm at right now. If it does go down, I'll adjust it. But I'm really only seeing a whole lot of setup for upside right now. And I know that's kind of weird because we're still sliding down, but that's what I'm seeing. So especially this check on this orange line, super critical. And if you have no other thing on your chart, that would be a really, really good one to have. For sure, So, all of that being said, I wish you guys a happy new year. I know this was a long video. I'm well aware. I appreciate those that stuck it out. And if you skipped around, no worries. I'm not going to be offended by that. I do hope that you guys were able to learn some things, and specifically seeing the setup the way that you've seen it might make you think about some things a little differently in the future. But I really do think that this is kind of it, like if it's going to continue to sell off, this is the best way for that distribution to happen. If it's going to make advancements, we might see a change of character really soon, like probably by election time. And then we would definitely see an advancement here past like the 2020 mark, if that makes sense. The only two areas that I think we're likely going to get to within the next 2 years is this space right here. I think it's very likely that between now and elections, or at least shortly after, maybe 3 to 4 months after that, we're going to see the area between $20 and $35. I think it's very, very, very likely that we come back there. And there's just too much evidence that we do that. So that gives you like kind of a big, huge helicopter analysis on what I think we're going to experience. I know when we talked about that video previously about $14 to $1, probably a lot of people take that very literally. They didn't even watch the video. I said in the video that I didn't think that was likely going to happen, but like the going to $1 part. But the setup is very similar to what I'm talking about right now. Like a lot of that overlaps, and it has to do with like just the timing of everything, right? And again, the only way this kind of really fails is if we break through this trend right here. And right now, if you look at the repetition here, it's kind of demanding that we eventually head back to the top. Like that should be the next major move. Should be some kind of reactive move. If we're going to go any lower, we need to have some kind of massive distributive UT upthrust into this region up here. That's my opinion about it. I think we're going to get an upthrust to like near this $20 mark. And then from that point forward, we would then see the sell off. But if we're going to, so if we're going to continue down, like that's what I think needs to happen. That makes sense. It's that simple. If we're going to turn, we still see the same kind of move back to the upside, but we would then have to find support in this higher bracket above 12. It hasn't happened yet. So we're kind of in this kind of limbo right now. We're waiting for this move to occur. Okay. Yeah. So if it's going to continue to do the same thing no matter what, or if it's going to change character, like it would still be the same result, which is moving up to this area. So I'm feeling really good about it myself, and I'm definitely feeling like it's going to happen. Probably something on or around earnings will be significant, either running into it or running right after it. So I know you guys are like, well, you didn't talk about going down and just into earnings. No, but again, we'll see what happens if this first upthrust fails. Okay. All right. That's all I got for you guys. And we'll talk to you later this week.